Hi everyone, a very good afternoon to all of you present here. I'm Nitisha Jain, Assistant Manager of TaxBuddy.com, and my area of expertise is income tax. So, after a very long time, again we are here with a live webinar to add on some knowledge or to clear your doubts, whatever you are having regarding some investment things. So today in this webinar we'll be discussing about all the tax saving ideas which you should know, which every person should know, because it's not necessary that we just invest at the year end only, that when it's time to file the income tax returns. So okay, fine, now let's think about investments to be done so that we can save our taxes. This is not the way. We have to plan our investment options way before the filing of ideas. If we start thinking about the investing options in whole year, and if we split the amount, then it will not create some trouble, it will not create a burden at the year end that now we have to invest the entire amount. If we invest properly in chunks or in proper interval, then it's very better, because it will get us to get higher returns as well. Along with that, it will also help in saving our taxes. So let's start with our topic. Let's know about the tax saving ideas. So, as the famous saying goes, a penny saved is a penny earned. Tax planning is one of the ways which can help you to save on taxes and increase your income. Income tax provides the deductions for various investments, savings, and expenditure incurred by the taxpayer in particular financial year. We'll discuss some of the avenues which can help you to save your taxes. Before that, uh, we will in this webinar, our major takeaways will be the introduction part, then how to plan your tax saving instrument, how you can plan, then what are the tax saving instrument, and this will be followed by a Q&A session. So, as I said, that intelligent tax planning strategy can serve the dual objective of helping the individuals meeting their financial goals as well as saving the tax in process. So, it will, if you are doing proper investments, then it will not just help you in saving the taxes, but it will also help you to meet your financial goals. You are going to get best returns out of the investments which you have made. Now comes the point that how you can plan your tax saving investments for the year. Normally, April 1st April is the beginning of the financial year. Starting from 1st April till 31st March of the next year is the whole financial year, in which people invest, people buy something or sell something, and these all things, if are in financial terms, then this will impact our return filing for a salaried individual as well for the non-salaried individual. If you are a taxpayer, then all these things will matter to you. Now, the purpose of sound tax saving investments should not only be to provide the tax exemption, but also you will earn tax free income. Now, as I said, that rather than waiting for the year end, that in the year end we will invest जितना भी at the time of return filing, we will think that how much tax we have to save, accordingly चलो उतना invest कर लेते हैं. उससे काम नहीं चलेगा. आपको आपकी इन्वेस्टमेंट्स प्रॉपरली पूरे साल में डिस्ट्रीब्यूट करने पड़ेंगे कि ओके फाइन, इन दिस मंथ आई एम इन्वेस्टिंग इनटू दिस ऑप्शन, और like say for example, in month of October you thought that you have sufficient balance and you want to start investing, so you started investing into ELSS mutual fund. That ELSS mutual fund investment will help you in getting returns, as well as that investment is an eligible deduction under section 80C. It will help you in both the aspects. It will also give you high returns. Secondly, it will also help you in save your taxes, because you will be getting the deduction from ATC, and that deduction will reduce your total income, and when the total income is reduced, so you will have to pay the tax on the lower amount. So it is a tax saving option, plus it will also help you in better returns. Then, it would be smarter approach to begin investments in the early quarters of the financial year, so that taxpayers can get time to plan their investments and avail maximum return. Now you are done with one investment option, which was ELSs. I'm just taking this one example. You thought to invest first in ELSs. Once you are done with it, now you think that you want to invest more. You have sufficient still balance, and you are planning for long-term investment things. Then again, in the second quarter or in the upcoming quarters of the year, you can again invest some of the amount in other tax saving instruments or in any other financial instrument, whatever you want to. So for that, you will get sufficient time to study about the market, that what investment option is getting higher returns, what is best for your financial goals, and as per your salary structure, what thing is best for you to invest it into. Accordingly, you can make your decision very wisely, because you will be having plenty of time, right? So as per your financial goals, as per your salary structure, you can make your own investment plans and you can invest accordingly within the period of the whole year. Now, factors like safety of the fund, liquidity, size of the returns are the things which you have to consider while zeroing the right tax saving investment plan. Now, most of the investment plans fall under ATC deduction only, and ATC deduction provides the maximum deduction of 1.5 lakh. Investor amongst that, ATC is best option, really. Amongst that, you get various options like you can invest into ELSS mutual fund, you can invest into national savings certificate, you can get life insurance premium for yourself, your spouse, or your children. For that also you'll get deduction. If you have children and you are paying tuition fees for their school, it's for their education, then that tuition fees paid for your children will also be an eligible deduction for ATC. Then fixed deposit, these all things will be providing deduction under ATC. Now we will be talking about some tax saving instruments, what you can invest which will give you high returns, as well as it will help you in tax saving also. First comes the fixed deposit. So if you are investing into a tax saving FD, that tax saving FD will be giving you better returns, as well as it is an eligible investment option under section ATC. It has lock-in period of 5 years on such FDs. If you are starting investing, it has lock-in period of 5 years, and that interest earned will be taxable. The rate of interest usually will vary between 5.5% to 7.75%. It varies. So now it depends on you as per your salary structure or as per your income earned. If you are a non-salaried individual, then whatever income you are earning from any of the business or any other things, whatever you are doing, from that, how much income you are earning, and accordingly you can plan your investment things. Then, if you are thinking about some long term investments, that you want to just invest the amount and forget the rest of the thing, for that, PPF is a good option. Public Provident Fund. Public Provident Fund is the popular investment vehicle for saving taxes, because in long term it will help you. You need to open a PPF account at the post office or any designated branches, or from any bank also. You can open that account. Then, whatever contribution you are making into PPF, that amount will have a lock in period of 15 years. And again, the reduction limit will be up to 1.5 lakh rupees only. Then, if you are thinking about some unit linked insurance plan, then this is also a long term investment products that will allow you to choose equity funds, debt funds, or both. This ULIP will give you the flexibility to switch between the funds in sync with your financial goals. By investing into ULIPs, again you can save your taxes under ATC deduction and 1010D section. So if you are very good at equity markets, debt funds, and all of those things, then you should definitely go with the ULIP plan, unit linked insurance plan. You can first just study about the entire market, what's going on in the equity market, what's going on in the debt market. which equity fund is giving higher returns, which debt fund is giving higher returns. Accordingly, make a wise choice and then start investing. Then, next comes is the National Savings Certificate. This is a saving bond scheme which encourages primarily small to mid income investors to invest. Those who are just planning to start investing, or those who have not having much income but still they want to start investing by a lower amount. Those people can start investing into National Savings Certificate thing. And if you have a saving account with the bank or post office, you can just buy the NSC certificate in electronic mode, provided you have the access to the internet banking. NSCs can be bought by an investor for yourself or on behalf of any minor with any other adult as a joint account as well. There is no problem in that. But yes, whosoever wants to start investing, they can start investing with this option. Apart from all of these things, you can invest in senior citizen savings scheme. So this scheme is a government sponsored savings instrument for individuals. They are focusing on senior citizen whose age is above 60 years, which gives a steady and secure source of income for their post retirement phase. After 60, many of the people gets retired. If they are into public sector job, then definitely they are going to get retired. But if they are into private sector job, or if they are not even doing the salaried job but having their own business, most of the people just retire voluntarily at the age of 60, and after that they think about their post retirement phase, like what they will earn after they'll stop working, how they will earn. So they just simply invest their amount and get the interest amount, and from that they just carry on their living. So it is a very good investment scheme for the senior citizen. And in this, the principal amount will be deposited in SCSCC account, SCSS account, that is an eligible tax deduction again under ATC, up to the limit of 1.5 lakh. This exemption is applicable only under the existing tax regime. It is not allowed if you are choosing for the new taxation regime. Then in that case, you are not going to get the deduction. This interest received is, however, subject to the taxation as per the applicable slab rate to the concerned taxpayer. Whatever interest amount you will be receiving, that amount will be taxable in whatever the slab rate you are falling into. Now comes, this was all about the ATC. So mostly ATC will cover the ELSS mutual fund, children's tuition fees, EPF, employee provident fund. If you are a salaried individual and you are getting salary from your employer, then most of the employer just deduct a particular amount from your monthly salary every month, and that amount will in the year end, whenever you will receiving your form 16, in that ATC deduction you will see EPF deduction. That amount which was reduced from your monthly salary will be accumulated and it will be shown in your form 16. That amount will be called as employee provident fund. You will be getting the deduction under ATC of the employee provident fund account. Then any children tuition fees, if you are paying for your children, that will be an eligible deduction. For any life insurance premium you have purchased for yourself, your spouse, or your children, that is an eligible tax saving instrument. Then if you have thought of constructing your own house, or purchasing your own house, because you're obviously getting a own house is a dream come true for everyone. So for that purpose only, government has provided many options, many tax saving options, so that people start investing in buying their own residential house. For that purpose, if you are if you have already purchased and you are paying the housing loan, so housing loan normally comprises of two parts: interest component and the principal component. That interest component is allowed under section 24 in the income from house property head up to rupees 2 lakh. So from wherever you have taken the loan. From that, if you have taken from bank, then they will give you a certificate. In that certificate, interest component and principal component amount will be mentioned separately. So the interest component will fall under income from house property head, and from that you will get deduction of 2 lakh rupees under section 24. And the principal component which you are paying, which principal repayment part, that will be allowed under 80C up to the maximum limit of 1.5 lakh. So overall, from the interest on housing loan, if you have taken, you can get total benefit of 3.5 lakh, 2 lakh from interest part and principal part 1.5 lakh. So 3.5 lakh income can be reduced from your total income. This is a great thing. Right. So these are all the ATC options. Now coming on to next deduction part. If you think that your ATC limit has been exhausted, you have entirely invested into ATC options and you want to invest some more amount, right? So for that thing, and you are planning for long term investment purpose, or you are planning for your retirement purpose, that after 60 what you are going to do, then for that, government has introduced a very good scheme which is called as National Pension Scheme, NPS scheme. In this NPS scheme, you are going to get a deduction of total 50,000 rupees under section 80 CCD 1B, and this deduction is over and above the limit of 1.5 lakh. Apart from ATC, you are going to get this deduction. ATC deduction amount is 1.5 lakh, and ATCCD 1B, which is about NPS, you are going to get additionally 50,000 rupees, and cumulatively from these two sections, you can claim 2 lakh of total deductions. Now, this NPS says that any citizen of India over the age of 18 years up to 60 years age bracket can participate in it. It is extremely cost effective since fund management charges are low. The fund managers manage the money in three separate accounts, which is equity, corporate bonds, and government securities. Investors can choose to manage their portfolio activity, choice or passively, order choice. So contribution and will fall under 80CCD 1B, as I said, and it will be over and above the limit of 80C. So you can invest into NPS if you are planning for long-term retirement purpose. Then tax saving mutual fund will cover the ELSS mutual fund part. This about the good thing about ELSS is that it provides a lock-in period of 3 years, and this is the shortest lock-in period which any of the tax saving option provides, because every tax saving instrument have a higher lock-in period. Like tax saving FD has 5 years lock-in period, PPF have 15 years of lock-in period. So it is only the ELSS mutual fund option which gives you the lock-in period of only 3 years, and it gives you higher returns than the other tax saving options. So you can invest into this one. This was all about the investment part, which you can start investing into in the middle of the year only. Don't wait for the last year. Just plan your investment things as per your salary structure, what how much you want to save at the year end. Don't wait that at the year end, whenever we'll be filing our return, at that time only we will invest. No, just start investing. Invest your amount, get the high returns, and save your taxes to a great extent. If you want any kind of help, then Tax Buddy is there for you. This is the website www.taxbuddy.com. You can visit to our website, or you can just download the app from Play Store. If you want any kind of assistance, like any expert advice you want, or any kind of notice if you have received from income tax department, you want to resolve it, then do not worry. Just visit the website, purchase the plan, and CA will be hired for your services, and they will be assisting you with every of your doubt, whatever you are getting. If you want to ask any doubts to me, then you can just comment down, and or you can just write to us at support@taxbury.com. Our team is there to help you out. I hope this was a useful webinar for all of you guys. If you have any questions, you can just write down in the comment box. Thank you so much for joining. See you in the next upcoming webinar. If you have any, if you have any, if you want that I should take a webinar on this or that topic, that also suggestions are most welcome. You can write down in the comment box. Thank you so much.